I'm Mark Crumpton. You're watching Bloomberg Technology. Here's a check of first word news. President Trump may delay signing off on the revamped trade agreement his administration just finalized with South Korea. The president made his comments today in Ohio.
So we've redone it, and that's going to level the playing field on steel and cars and trucks coming into this country. And I may hold it up till after a deal is made with North Korea.
Russia's Foreign Minister Sergei Lavrov says Moscow will expel 60 American diplomats and close the U.S. consulate in St. Petersburg. Russia also said today the U.K. is in violation of international law for refusing to provide access to Sergei Skripal and his daughter after they were poisoned with a Soviet-era nerve agent. Former Veterans Affairs Secretary David Shulkin's blaming his sudden removal from the Trump administration on political forces he says are bent on privatizing the agency. In an op-ed in the New York Times, Shulkin wrote, "It should not be this hard to serve your country." Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. Bloomberg Technology is next.
And this is Bloomberg Technology. Coming up, stocks surge to cap off a wild week for the markets. We discuss how big tech companies fared in the first quarter of 2018. Plus, political risk taking a bite out of Amazon. President Trump suggests Amazon should pay more taxes. Will the White House take action? And GoPro is shifting its business into licensing technology. Will it be able to strike some deals? We'll hear from CEO Nick Woodman in an exclusive interview. But first, to our lead. Stocks surged dramatically in the session with tech shares leading the way. It was another roller coaster session for U.S. equities, all the major averages rising more than 1%. Meantime, the shortened trading week for U.S. stocks has come to a close after wild swings in the market in the last few sessions. Bloomberg's Markets Live editor Mike Regan joins us in New York to wrap it all up. So, Mike, what were the highlights, the highs and the lows?
Well, I think tech investors especially can sort of breathe a sigh of relief today, especially for many of the stocks that have been the real story stocks, really the focus of attention this week. We saw, for example, Amazon up 1.1%, even after another tweet from President Trump this morning calling into question what exactly he wants to do about Amazon. We also had Facebook up 4.5%, NVIDIA up about 4.5%. And these were really kind of the stocks that had people nervous earlier in the week. And for the quarter, as you mentioned, for the starts of the year, tech is still the standout. The NASDAQ 100 up and the S&P 500 Technology Index up about 3% for the quarter, even as the overall S&P 500 was down 1.2% for the quarter. The first quarterly drop for the S&P 500 since 2015. And just some eye-popping gains for the quarter. Netflix up 54%, Amazon up 24%, NVIDIA up 20%. So it's a great quarterly story for the tech sector specifically, even after a pretty nail-biting week for the group.
Netflix and Amazon, as you said, defying the odds. I have an interesting chart here, #BTV1615, which shows if you take out Amazon, if you take out Netflix, consumer discretionary spending is actually down in the first quarter. What do you make of it?
Right, absolutely. I mean, Amazon, we all always consider it as a tech stock, but as far as the industry classifications of the big indexes, it's considered a consumer stock in the retail category as well, and just a giant weight in those indexes. Remember, these are market cap weighted indexes. So Amazon, makes the retail group and the consumer discretionary group look good when most of the rest of the group is struggling a little bit.
As you said, Facebook turning a corner, obviously in the middle of this Cambridge Analytica data controversy that still seems to be unfolding. Has it hit a bottom, or could there be more bad news to come, especially with Mark Zuckerberg potentially testifying in Washington?
You know, it's a very difficult question to answer, particularly because this is a very unusual week. Like we've mentioned, it's the end of the month, it's the end of the quarter. So there's investors adjusting positioning and sort of rebalancing portfolios because of that. Also, the holiday shortened week, volume was good in the stock market. It was average to above average. But for the type of price swings that we've seen, it's unusual to not see a huge increase in volume as well. So it's difficult to draw too many conclusions for this. Obviously, Facebook had some news out today talking about further efforts to fight fake news and fake accounts and foreign influence on the election. So that very well could have bolstered sentiment in the company. I think the big question for Facebook is investors can't really yet gauge how much damage has been done to their user base from this scandal and from the delete Facebook semi-movement that's going on. So it's hard to tell right now until the company reports earnings in May if there was any damage from that and how big it was. I mean, obviously, Facebook is still a growth story as far as the official analyst estimates. Whether or not that will change at all because of this scandal, it's very difficult to tell right now, and I think that's part of the reason why we're seeing such volatility in the stock.
All right, our Bloomberg Markets Live editor, Mike Regan, thank you so much for breaking it all down. As we've been talking about, we've been watching Amazon, the stock sinking 6% over the course of the week, sparked by an Axios report saying the president wants to impose more regulation on the company. And of course, then came President Trump's tweet saying, I have stated my concerns with Amazon long before the election. Unlike others, they pay little or no taxes to state and local governments, use our postal system as their delivery boy, causing tremendous loss to the U.S. and are putting many thousands of retailers out of business. Trump has been lobbying criticism at Amazon throughout his presidency, saying the company is to blame for job losses and economic stagnation in towns and cities where brick-and-mortar businesses are shuttering. To talk about the relationship between the tech giant and the administration going forward, I want to bring in our Bloomberg Tech executive editor, Tom Giles, in Washington, and Bloomberg's national politics reporter, Sahil Kapoor. So, Sahil, first of all, what's been the reaction in Washington to this, and what could the president actually do here?
Well, a pretty muted reaction overall from lawmakers. Keep in mind, Congress is on recess at the moment, so members of Congress don't react unless something is really blows up and captures the attention of people back home, which this doesn't seem to have. One important thing to note is that the White House poured a little bit of cold water on this talk earlier today by telling reporters that no new actions are under consideration with regard to Amazon after the president's tweets on this. It's entirely possible that the president is more venting his frustrations than necessarily signaling a policy shift, because this would mean more regulation, which his party tends to oppose. It would mean more taxation, which his party strongly opposes. Remember, they passed a tax bill just a few months ago that, of course, if the president wanted to, could have gone after Amazon, but didn't. So there's not much of an appetite to do something about that. 5 times last year, it should be noted, the president vented publicly on Twitter about what he called the Amazon Washington Post. That's a key political context to keep in mind there, because the president has gone after Amazon when the Washington Post, which of course has the same owner, Jeff Bezos, has written stories about him that he doesn't like.
Absolutely easy to forget that Jeff Bezos also owns the Washington Post, with all of the action coming out of Amazon over the last year. Tom, Amazon does collect taxes on products it sells in 45 states. There are different rules for third-party vendors. It does get a little complicated. Amazon has said it would support legislation, but how strong is President Trump's argument here?
Well, he can keep hammering away at this, right? And he can put pressure on states to think about this, to change their rules. So he does have the power of the bully pulpit to jawbone, to cajole, to encourage states to do this. You could see a scenario where the states come out and say, okay, Amazon, it's incumbent on you to charge tax on behalf of these third-party merchants. Remember, that's about half of Amazon's volume. So it's a lot of the merchandise that they sell over their platform. On the other hand, Amazon's already charging taxes, and that really hasn't put a big dent in their growth trajectory so far.
There's also the question of whether, Sahil, Amazon could strike some sort of sweetheart deal with the Postal Service, which some would argue that Amazon has actually kept the Postal Service afloat, despite what President Trump had to say.
Right. The Postal Service is doing its job there, and there's no sort of there's no sort of exploitation, I think, that has been argued that Amazon is necessarily doing. So I think that would, we would have to wait to see what the White House suggests there, whether there's a proposal that they have, something they want to put on the table to make changes in that. But at this point, nobody really knows. This seems to be coming from, these are direct thoughts from the President of the United States without necessarily a policy backbone to them or allies on board with whatever it is that he ultimately wants to do. So at this point, it's just a conversation. But as we've seen, markets react, and people take notice when the President of the United States says something.
Whether it's Apple, though, or Amazon, or Google, or Microsoft, or Facebook, Tom, which of course Facebook has been in the spotlight the last few days, could more regulation be coming for tech, and could the halo effect around technology be over?
To answer your first question, the answer is absolutely yes. You could see some form of regulation. I don't see it happening as quickly from Congress as, say, for example, an agency like the FTC, the Federal Trade Commission. You could see them come out with some kind of rules around social media, around disclosures, around political advertising. The sense that we get from everyone we talk to is that even if they come out with something really meaty, one, it would take a long time to kind of put in place, and two, it would affect margins. It would affect profit just around the margins. This is not something that's going to strike at the core of these companies' businesses. Remember, Trump had a chance to kill the Whole Foods deal, right, which would have been a major strategic blow to Amazon's ambitions. It didn't do that. So it could legislate, it could make some changes, but I see it happening around the edges.
Sahil, big tech isn't all one thing. There are a lot of issues at play here, whether it's the size of these companies, whether it's data privacy. But do you think tech and tech regulation could become some sort of flashpoint, some sort of partisan issue going into the midterm elections?
It's absolutely a political conversation right now. I don't know that it breaks down so cleanly along partisan lines, except for the fact that Republicans tend to be the anti-regulation party and Democrats are more favorable to regulations when they see a problem that needs to be fixed. I would be more worried if I'm Facebook right now than if I'm Amazon, because Facebook has been under the gun, facing enormous amounts of criticism for their handling of data privacy and security issues ever since the 2016 election occurred and some of the stuff came out about how their platform was weaponized and manipulated. And a lot of Facebook's reaction has been initially dismissive and ridiculing and mocking. Remember, Mark Zuckerberg said it's crazy to think that his platform could, or the weaponization of his platform, misinformation, could have swayed the election. So Facebook has been treating this much more as a PR problem than anything else so far, it seems. And that has landed them in the crosshairs of Congress. Zuckerberg has suggested he would testify. So I think that's where the focus is going to be in Congress. I've heard much less of an appetite for going after Amazon than Facebook.
And, haven't heard President Trump complaining much about Facebook. You wonder why. All right, Sahil Kapoor, our national politics reporter in Washington. Thank you. Tom, there is one more thing I want to talk to you about. Under Armour saying an unauthorized party acquired data associated with roughly 150 million MyFitnessPal user accounts in late February. The company said they became aware of the issue March 25th. The headlines crossed just before we got on the show, Tom, so I know there's not a lot of new information, but what do we know and what's your take on this?
Yeah, so 150 million people, that's a lot of people. The information that they got, we understand it's email addresses, it's certain passcodes. I'm not exactly sure how much of that they got and how much they were able to use it. We know they didn't get credit card information. They didn't get a lot of that sensitive financial data that we really are worried about. It is disconcerting that this is a tool that we use kind of for health tracking. You don't like the idea that somebody could sort of hack into something that has my heart rate and other personal information like that. We don't have any evidence that that kind of information was stolen. But this device, it is something that people carry around with them everywhere, like our phones, and it is gathering a lot of very sensitive information that I don't necessarily want to be released to the public.
All right, Tom Giles, our tech editor, thank you so much for stopping by. We will keep following that story. Coming up, GoPro is licensing its technology and introducing new cameras. But can the company bounce back to the highs of 2014? We're going to talk to CEO Nick Woodman next in an exclusive interview. This is Bloomberg. last week, GoPro announced its first major foray into licensing its technology. GoPro signed a multi-year agreement with its action camera manufacturer, Jabil, for designs and intellectual property to be used to make camera lenses and sensors for other companies. For instance, GoPro's lens could be used in video conferencing hardware or body cameras for police officers. It's a big move for a company that was once valued at more than $11 billion, market cap now closer to $700 million. Here to discuss, GoPro CEO Nick Woodman for an exclusive interview. So I know you've been thinking a lot about new business models and where to go from here. How much does this open the aperture for you? How much new business could this particular licensing deal lead to?
We think over time it can be a pretty exciting opportunity for us. When we discussed it with Jabil, it was something that they were very interested in because GoPro's brand really speaks to image quality. And we have a lot of IP at GoPro around our lens design, coupling with sensors that can enable much better image quality in many devices today, where the camera is something of an afterthought. So for a company that's making devices that are non-competitive with GoPro, they can now license our technology and in some instances license our brand to make it clear to consumers that their device really does offer GoPro-like image quality.
So licensing is a high-margin business. I mean, how much impact could you see from a profit perspective this year?
We're not sharing any information on that, and we're excited to announce new deals as they come up. But I think what is really interesting to us is that our manufacturer sees a lot of opportunity to extend our brand outside of our core business on our behalf and act as a sales agent for GoPro. And we're excited to see what other businesses are interested in putting our brand and most definitely our technology into their products.
You've also got a new camera out today, a new Hero camera, $199. You know, in general, how do you think this will impact the current momentum?
Well, the current momentum is good. As I've stated before in previous interviews this quarter, now that we have our GoPro lineup at the right price, we're proving that there's significant demand for GoPro at the right price. And we're a much more data-driven company today than we were even a year ago. And the data is clear that the entry-level consumer really wanted a classic Hero camera from us with a touch display to make the camera easier to use. It's what people think of when they think of using a GoPro. We may have confused some consumers with our previous session camera, so replacing that with this new $199 Hero camera today is a obviously good move. And we think it's going to resonate with entry-level consumers around the world, and so we think it's just going to be additive to the momentum that we're already seeing in our business.
So that said, you know, we talked about the market cap drop. The market is expecting GoPro revenue to fall 9% this year and looking at single-digit growth next year. Are they missing opportunities that you are pursuing?
We think so.
What are those opportunities?
Well, in just our core business, as we've shared, we expect to return GoPro to profitability for the second half of the year. We do see an opportunity to grow our business this year. We see strong sell-through of our lineup, and as I've mentioned, we expect that to increase with the launch of our new $199 Hero camera today. And something else, we're increasing our advertising budgets by more than 50% this year. And we have identified that we need to not only have a great lineup at great prices, but we also need to grow our brand like we did in previous years. And we're going back to marketing levels that we had during those growth years, and we believe that that can restore us to growth and profitability.
What about M&A and or partnerships with larger companies?
As we've shared,
I gotta ask.
No. It's a very good question, and it's my job as founder and CEO of GoPro to look for the best opportunity to scale our business on behalf of both our customers and our investors. And if there's an opportunity to do that with a larger company through a sale of the company, sale of GoPro, we would take that seriously.
All right, Nick Woodman, CEO of GoPro. Great to have you back here on the show. Thanks so much for stopping by. Coming up, we are on IPO watch as Chinese video streaming service iQIYI starts trading on the NASDAQ. An interview with the company's CEO is next. This is Bloomberg. Now to IPO news. Baidu's iQIYI has completed its U.S. IPO and is the largest Chinese video streaming service to go public. Shares fell in their trading debut after the company raised $2.25 billion. Bloomberg Tech's Selena Wang had a chance to catch up with iQIYI CEO earlier today.
After 8 years of development, iQIYI has become, we have a very mature business model and also a great profit model. So for iQIYI, we also need more capitals. At the same time, iQIYI's former employees also need some incentives. At the same time, the incentive will also help to attract more new talents. So in all these areas, so that's why iQIYI decided to go IPO at this point of time. And then considering the capital market in China as well as the capital market in the United States, we think the U.S. capital market is more in line with the market growth trend of our business. This is very important. In the meantime, there are two exchanges in the U.S. Baidu was also listed at NASDAQ. Also, NASDAQ has a great brand image, which is in line with a new strategic company, a new technology company. That's why we hope the NASDAQ, the brand, would be more in line with our iQIYI brand. We can grow together.
Now, there's many companies in the U.S. that want to build an audience in China, and you've already signed a deal with Netflix. So are you searching for more content deals like that in the U.S.?
Based on Chinese law, for overseas company to operate in the video platform in China, that's not allowed. That's why we have deal with Netflix to bring native content to China after it's being approved by the Chinese government. Just like when we broadcast Pixar's content on our iQIYI. So in the future, if possible, we want to duplicate this type of business model.
That was iQIYI CEO Yu Gong with Bloomberg Tech's Selena Wang. Coming up, is a tech Cold War on the horizon? We'll look at the latest salvos between the Trump administration and Beijing next. And let's take another look at market performance as we close out the first quarter of 2018. This is the FANG Index, a basket of tech's 10 biggest companies around the world, still higher for the quarter, but taking a big leg lower the past few weeks. This is Bloomberg.
I'm Mark Crumpton. You're watching Bloomberg Technology. Here's a check of first word news. President Trump says the U.S. military will end its presence in Syria in the very near future. He made his comments today in Ohio.
We're knocking the hell out of ISIS. We'll be coming out of Syria like very soon. Let the other people take care of it now. Very soon. Very soon we're coming out. We're going to have 100% of the caliphate, as they call it, sometimes referred to as land, taking it all back quickly. But we're going to be coming out of there real soon.
The UN envoy to Syria, Staffan de Mistura, met with Russia's foreign minister Sergei Lavrov in Moscow today to discuss the humanitarian situation. De Mistura says the talks are critical to ensuring the safety of civilians being evacuated.
The UN is ready. The UN is prepared. We are actually preparing all our capacity in Damascus and elsewhere in order to actually reach now the civilian population in Eastern Ghouta and hopefully in Douma as much as possible.
U.S. Defense Secretary Jim Mattis welcomed John Bolton, President Trump's pick for National Security Advisor, to the Pentagon today. Bolton has publicly advocated for overthrowing the North Korean government. Mattis reportedly favors diplomacy to rid the North of its nuclear weapons. He's also said to be at odds with Bolton on Iran. Bolton replaces H.R. McMaster next month. United Nations Secretary General Antonio Guterres is praising the recent visit to China by North Korean leader Kim Jong-un and the announcement of a planned meeting with South Korean President Moon Jae-in.
I am very encouraged by the recent developments, very encouraged by the announcement of the Inter-Korean Summit. And I believe that in this world where unfortunately so many problems seem not to have a solution, I think there is here an opportunity for a peaceful solution to something that a few months ago was haunted us as the biggest danger we were facing.
South Korea announced a rare summit at a border village on April 27th that could help global efforts to resolve the decades-long standoff over the North's nuclear program. UK health officials say the daughter of a former Russian double agent poisoned along with her father on British soil is, quote, improving rapidly. Yulia Skripal had been in critical condition following the March 4th attack. Authorities also say Sergei Skripal remains in critical but stable condition. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. In New York, I'm Mark Crumpton. This is Bloomberg.
This is Bloomberg Technology. I'm Emily Chang. Let's return to our top story. Amazon stock under pressure following renewed criticism from President Trump. However, analysts are still bullish on Amazon. There are currently 48 buys on the stock, and several analysts reiterated their optimistic calls over the last few days. Speaking earlier on Bloomberg Television, Gene Munster, co-founder of Loop Ventures, said there's little chance of President Trump taking action on Amazon. Take a listen.
I think there's probably a 3% chance. It's extremely low. This is a great vehicle for Trump to kind of exercise some of his issues with Jeff Bezos. But beyond that, I think that it's fascinating because if you look at the top or 7 kind of the most the leading tech companies right now, 6 of the 7 have some sort of a fundamental issue, whether it's Facebook with privacy, Google with potentially how they're doing data. There's some concern about Apple and the iPhone numbers, Twitter, just down the line. Amazon, surprisingly, is the one that hasn't had any problems.
President Trump has made it clear that he wants to punish China for violating the intellectual property rights of American corporations. Well, it looks like China is getting ready to respond on that front. According to a post on the State Council website on Thursday, China will examine the transfer of IP as it relates to national security when it comes to acquisitions by foreign investors and technology exports. To look at this looming tech Cold War, potentially, I want to bring in Isaac Stone-Fish, a senior fellow at the Asia Society Center on U.S.-China relations. So, Isaac, again, a lot still remains uncertain, but now we do have a clue from that posting on the State Council page. What do you make of it?
I think things are not looking very good for either side right now when it comes to calming trade tensions. And my big worry when it comes to this is not that there'll be an official reprisal from Beijing that would make it more difficult for American tech companies to expand in China, a market they've had traditionally a lot of trouble with, but that there'll be some sort of grassroots boycott stirred up by the Communist Party that will make Chinese people, very anti, say, Coca-Cola or LinkedIn or Airbnb, one of the few tech companies that actually has a presence in China.
Interesting news on Airbnb sending a letter to their China-based hosts that they will comply with government laws, and that could mean turning over information on them to the government. It's kind of business as usual for a U.S. tech company operating in China, but what's your interpretation?
On the one hand, I think we do have to give Airbnb credit for getting out in front of this and saying, hey, we don't necessarily have a position on these laws, but these are the laws of China and we're going to follow them. On the other hand, I think it should give people pause that if you're hosting Airbnb, if you're an Airbnb host in China, or if you're going to China and want to stay in Airbnb, you just have to assume that the Chinese Communist Party and the Chinese government has access to all your data. That said, I think when Americans visit China, that should be the assumption as well, that none of their data is private, and so it's in some ways a restatement of things that are already out there.
So talk to us about what companies you think are at the biggest risk here and why.
I'm worried about what might happen to Facebook in this particular situation. I think Facebook has tried really, really hard to make inroads into the Chinese market for obvious reasons. And they so far have not had any visible public success. And I think with the increased tensions, it's certainly possible that Facebook decides to make some sort of ethical compromise that will end up really, really biting them back down the line. I think we already know that China has very different standards about privacy than the United States, and you don't have the same expectation of online privacy in China as you do in the United States. That said, if Facebook were to go out there, I think it's also certainly possible that they would need to store servers in China, which would give China, the Communist Party, a backdoor into American data on Facebook, which would be problematic.
All right. Isaac Stonefish, Senior Fellow at the Asia Society. Isaac, thank you so much for stopping by. Lots remains to unfold. We will keep watching. Meantime, Microsoft unveiled its biggest corporate reshuffling in 3 years. The biggest change being the departure of longtime Microsoft veteran and Windows chief Terry Myerson. Myerson's exit comes amid dwindling revenue from the legendary operating system and a shift toward areas like the cloud and artificial intelligence. Here to tell us more about the changes at Microsoft, Bloomberg tech editor Alistair Barr. So it was a little confusing initially what this all means. Demystify it for us.
So it's mainly all about the cloud. So the cloud business, the Azure business that Microsoft has been growing a lot. And really the rise of the cloud has completely blown apart what Microsoft used to do, which was you had your computer at work or you had your servers at your company, and Windows was run on those things, and all the software worked together like that. Now the cloud really there isn't really an operating system for the cloud. It's just a bunch of servers and data centers run by these big companies. So basically the reorganization is a huge chunk of the cloud business on one end, and then experiences and a small bit of devices in another group. And basically you're taking things like the Office software that a lot of us have used in the past. That's going to be delivered through the cloud, and that's how the structure works from now on.
Tell us a little bit about Terry Myerson and what his departure means.
We joke that he has had one of the toughest jobs at Microsoft for years. So he's been running the Windows business, obviously. So PCs sales of that have been falling since I think 2011. So that's a really, really tough market. Sales have been falling of that operating system. And then also he ran the email exchange server, which was a very old way of running your email system. Not many people do that now. Again, that's run through the cloud. So he really had a tough go of it, and he's worked really hard, and now they're sending him off.
What does this signify about the next generation of Microsoft? I mean, we know it has to do with the cloud. We know it has to do with AI. But are we going to see a fundamental shift in where the money comes from?
Certainly the cloud is where the money is going to come from in the future. One thing to look at is Office 365, which some companies use, right? Which is the old Office software that used to sit on the Windows PC, and now that's available through the cloud. That business is going gangbusters, and the Office business is now a part of the experiences and device division. The device question is still a big one for Microsoft. They really failed in mobile. They have their own PCs, things like that. That hasn't really taken off. So really, I think it's going to be Microsoft's software being delivered through its cloud.
All right, our tech editor, Alistair Barr, thanks so much for demystifying. All right, coming up, Tesla is putting the pedal to the metal when it comes to the Model 3 production, now calling on volunteers. We'll discuss next. And let's take another check on the markets. Bitcoin having its worst start to a year since the cryptocurrency's first block was created in 2009. Bitcoin falling below $7,500 today and has plunged more than 40% over the quarter. This is Bloomberg. Facebook says it has started fact-checking political photos and videos in an effort to combat election meddling. Facebook outlined its priorities and initiatives in a blog post to, quote, protect and promote civic engagement on its platform. New features also include verifying links beginning in France and rolling out to other countries soon. Now to a Bloomberg scoop. Tesla is urging workers to prove the, quote, haters wrong. According to internal memos, the company has asked for volunteers to help ramp up the output for its Model 3 line. Bottlenecks at factories and assembly plants have raised concerns the company may need to raise more cash to mass manufacture the sedan it has spent billions of dollars on. Joining us now with more, Dana Hull, our Bloomberg Autos reporter. So what is the significance of these emails?
So there were two emails that were sent last week that Bloomberg obtained. One is basically letting people know that there will be no Model S and X production on Friday. Workers can either take a day off with pay time off, or they can volunteer to work on the Model 3. So we don't know how many workers are impacted, but that's kind of interesting. The second email came from Doug Field, who's the Senior VP of Engineering, and it's just this like rah-rah corporate rally the troops memo, really kind of urging people to go all out to make as many cars as possible.
So what are they supposed to do? Sleep in sleeping bags on the production line, like Elon Musk?
I don't think they're doing that, but he basically said that they were at a rate of 200 cars per day, and that the goal was to kind of break through 300 cars a day. And you saw the stock rise because I think expectations had now fallen so low that about this production ramp that the memo makes it sound like they're actually farther ahead than many analysts had been anticipating.
In light of the recent accident of the Model X, you know, I just wonder, the rush kind of worries me a little bit. Should we be worried about that?
Well, I think that's the big question, right? So Tesla has had a horrible week in terms of news, a lot of like negative catalysts. This is the final week of production. Originally, they had said that they would make 2,500 a week. And are they making these cars with consistent high quality?
So talk to us a little about the business model and, you know, the comparisons to Netflix, for example.
Well, that's interesting. I don't know enough about Netflix to sort of feel like I can make an apt comparison. But for Tesla, it's always growth, and they're always reinvesting money into growth and into future products. With the Model 3, they really need to get the Model 3 out in order to have money. So they're at this inflection point where the production is going to impact their cash flow, and if they don't get enough cars out, they're going to need to raise more money sooner rather than later.
We are getting some headlines in right now about SpaceX, the FCC authorizing SpaceX to provide broadband satellite services. What does that mean?
So SpaceX's business model thus far has been launching rockets for paying customers, but they ultimately want to create a colony on Mars, and that's going to be very expensive. And so if they can provide space-based internet service, that would be a great source of revenue from them. And so they launched the first 2 test satellites recently, and it sounds like now they're just getting approvals to kind of continue to build out that network.
So quickly, I do want to touch on where we are with Model 3 production. #BTV2341. Looking at this chart, this shows, you know, how many cars Tesla produced each quarter, and you do see the plateau here. You know, how many Model 3s does the company hope to make by the end of March, and where are they now?
So they originally said they wanted to make 2,500 a week by the end of March. Our own Bloomberg tracker and a lot of analysts don't think they're anywhere near that. However, the memos that we got sounds like they're going all out to try to get as close as possible. So that's why you saw the stock rise today.
All right, Dana Hull, thanks for breaking that down, and great job on that Bloomberg scoop. We'll be watching. Coming up, streaming success. Spotify's big day is a-comin', and its competitors are listening in. We'll plug into the streaming landscape next. This is Bloomberg. When it comes to the music streaming world, all eyes are on Spotify with its highly anticipated direct listing next week. So how is competition reacting? Bloomberg's Caroline Hyde spoke with the CEO of SoundCloud on how his artist-oriented platform views Spotify's direct debut.
Spotify, I think, is a fantastic development ultimately for the streaming space. You know, we're in a moment now, which I think many of us may not have envisioned even a couple years ago, where we're on path to having hundreds of millions of consumers paying for streaming music. And when you see that kind of return to growth in the industry overall, you know, it's an exciting development for really all parts of the chain, for distributors, for labels, for publishers, and of course for artists and for consumers. So, you know, for us, I think that the tremendous growth that we've seen in the space overall and the Spotify listing is a fantastic development for SoundCloud and all of us in the streaming industry.
Your focus at SoundCloud has been about the artists in particular. This looks like an area that Spotify is also getting into. They recently bought a company called Soundtrap. Is that going to be more of a concern for you if suddenly this competitor gets more access to the capital markets?
Well, SoundCloud has always been focused on the creator first, right? Our mission really begins with the creator, and we are the platform where they come first to upload and share their work with the world. So even as we participate in the streaming space, we're also coming at it from a very different angle. So for us, the focus is on those creators, and we've always been the leader in that space. And in fact, with all the things that Spotify has done well, you know, the metrics and the usage that we see on our creator side is quite a bit larger than anything that we've seen disclosed from them to date. So we're going to remain focused on being that platform where creators come first to upload and share. It is also the reason that listeners love SoundCloud, and it's a different experience for them because it is also about being first. It's about discovering things when creators are first uploading, when they're first sharing with the world. And that exciting connection between creators and listeners is what makes SoundCloud so distinct and unique in the space.
So almost if you look at it like a food chain, you're sort of at the start of the food chain and you feed up to Spotify. Can you coexist in the competitive landscape as it is? Yeah, we can absolutely coexist because the SoundCloud business is actually built around two sides of that marketplace. So with the creators, you know, we really are the industry leader in terms of tools for creators to publish and share their work with the world. And we have hundreds of thousands of paying creators. And that's an excellent business for us. It's very different than the consumer streaming business. It's a subscription software business where those creators pay us for our tools and services. And again, you know, we are the clear leader here. Because of that commitment to creators, we also get a very unique catalog of content. SoundCloud has over 175 million tracks in our catalog. It's multiples the size of the catalogs that are being distributed by mass streamers. And again, that's why consumers choose to come to us. So we have a differentiated focus on creators. We have a differentiated business around those creators, which gives us a differentiated catalog. And again, a differentiated experience for consumers. So we are playing in a very, very different way than any of the mass streamers, and we view our ability absolutely able to coexist alongside the growth of those larger players. How big can you become, though? What about monetization? Because that has been the key missing link when it comes to SoundCloud. Well, actually, you know, I've been with the company just about 7 months now, and you know, we ended 2017 really ahead of our plans in almost all dimensions, in terms of our usage, in terms of our revenues, in terms of our cash balances. So we ended 2017, as we announced, with over $100 million in revenue, and we're very pleased with the way that we see that growing, both on the creator side as well as on the listener side. So already our business is, while smaller than others, it is also a meaningful business, and we're very excited about our prospects to continue to grow that. So we absolutely view a very significant value for SoundCloud to be compared with other large streaming services. SoundCloud CEO Carrie Trainor there. Now, sticking with music streaming, I want to bring back Bloomberg's Caroline Hyde in London to tell us more about next week's highly anticipated Spotify direct listing. So, Caroline, what are the bullish signs? What are the bearish signs? Bullish signs that start with the company itself, because they did update us with their numbers earlier in the week, and the numbers look relatively strong. I mean, they're seeing paying customers climbing about a third this year. They say their revenue is going to climb about 30% this year, so strong there. And it seems to be being picked up by a number of these analysts: RBC, MKM Partners, Atlantic Equities. All three have got a buyout on the stock before it's even listed when that comes April the 3rd. They say it's the biggest player in the field. In fact, RBC even puts a size to the addressable market of $125 billion. What's interesting, though, is the difference in price targets, because there's some $60 gap there, some saying $220, some saying $160. And the reason it's so confusing is, of course, this isn't an IPO. There's no new shares coming to the market. This is going to be existing shareholders being able to sell. Well, the supply, therefore, isn't really known. So we're going to have a lot of instability, a lot of price fluctuation, we estimate, next week. And so notably, we've therefore got to also factor in what the market's been doing. I can't only imagine what Daniel Ek, the CEO of Spotify, has been doing while looking at the market sell-off in some of their key peers. Have a look at the terminal, Emily. G hashtag BTV1562.
Down goes Netflix in the white line, which is what, of course, they've been trying to associate their business model with. Down goes Pandora in the blue line, off by more than 5%. And down goes the S&P 500, not off nearly so much as these key peers. So it's going to be some slightly nervous times next week, I think.
So, Caroline, you know, Spotify's business model is also very unique. We had Pandora on the show yesterday. They make money, you know, almost an entirely different way. How are investors thinking about Spotify's business?
It's interesting because, of course, Spotify would rather like you to think of Netflix, a subscription service, wants you to look at these sorts of numbers, and wants, of course, you to look at the valuation that Netflix has, about $120 billion. But notably, Netflix, the more subscribers you get, well, the more money it makes. But with royalties built into Spotify, the more subscribers they get, they have to pay more to the likes of Sony and Universal. So the math doesn't always work out that way, Emily. So we'll have to see how they really digest the business model going forward.
All right, Bloomberg Caroline Hyde for us live in London. Thanks so much, Caroline. We'll, of course, be covering this all next week. And that does it for this edition of Bloomberg Technology. A reminder, we're live streaming on Twitter. Check us out at Technology, weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. That is all for now. This is Bloomberg.